Welcome back to our video series on binary options. In this video, we're going to walk through some specific strategies for trading the 8:30 a.m. US announcement. In the past, we discussed being aware of news that may move your asset class or your particular security. If you trade US equities or any currency pairs that contain US dollar, then you certainly need to be aware of the 8:30 US announcement. Through this video, you'll learn some strategies that can help you profit from the announcement. What is the 8:30 a.m. US announcement? The 8:30 a.m. US announcement typically refers to the US data on employment and jobs that's released to the market at 8:30 a.m. Eastern Time on Thursday mornings. The market typically views this data as an indicator of economic conditions, and the number can move the market significantly across multiple asset classes. As you can see here from this webpage, there's plenty of other economic data that has the potential to move markets as well. So here's a list from last week of some of the significant data with their release dates and times. You can get current data at Yahoo Finance, Briefings.com, and several other free sites. You should always make sure that you know what data is expected during your trading day for just about any intraday trading strategy. You could develop a trading strategy around just about any one of the economic releases in the US or any country. The reason we're focusing on the Thursday morning jobs data in particular is that the data is available every Thursday, so you can use your strategy every week. Some of the other data points can be monthly or even quarterly, so designing a strategy around those data points is going to be difficult to fully utilize on a regular basis. As far as the actual strategy, because the data is so macroeconomic in nature, it really doesn't matter a whole lot whether you're trading US equities, currency pairs containing dollars. The basic concept is the same. When I'm trading this type of macroeconomic information, I like to use the S&P futures as an equity asset since it's the most liquid. You could use individual equities, but the S&P is the most obvious choice. For currency pairs, I like to trade pretty much any of the majors versus USD, but typically the euro versus dollar or the pound versus dollar. When you're trading this type of information, the market moves very quickly. So typically what I like to do is pick one asset and trade that asset exclusively. The market's going to move so quickly that by the time you enter the one order, it may be too late to move over to another asset class. You might be a little more dexterous than I am. You can have both options up on your screen and ready to go, so S&P and a currency pair, for example. But for me, that's pretty advanced multitasking. I'd rather focus on one trade, and if I really feel that strongly about it, I might put just more of my capital allocated to that one trade. So you really should choose one asset. Now, regardless of which asset you choose, what you want to do is wait for confirmation as to the direction of the movement. And that's going to obviously be driven by where the data is relative to expectations. In a bull market, positive news will be fuel for a rally, and slightly negative news might be a buying opportunity. The opposite is usually true in a bear market. So negative news is going to be fuel for a decline, and slightly positive news might be a good entry point for a short position or a long put position. We're currently in a bull market, so what I usually do is I wait for the number to hit before buying binary calls. I get set up to buy binary calls. I've highlighted the data from last Thursday. So last Thursday, the market was expecting around 348,000 initial jobless claims. Actual initial claims came in at 346,000. So the number was ever so slightly less than expectations. But because we're in a bull market, the market looks at everything with rose-colored glasses. So I was expecting a slight downturn in the market followed by a rally. Let's look at what actually happened. So here's a chart of the S&P futures last Thursday on that day, and this vertical line right here represents the 8:30 time frame. You can see on the volume histogram that volume picked up dramatically right at that point because that was when the market had the 8:30 data. Prior to that, less trading was occurring. Now, because we're in a bull market, what happened first, as I expected, was since the number was ever so slightly lower than expected, the first people came in and sold. And you can see those sellers by this slight wick downward in that 8:30 candle. Right when I saw the market start to trade down, I pushed go on my buy order for binary calls. And sure enough, within that same candle, the market rallied and stayed above my strike price pretty much all morning, all the way to lunchtime. So I was able to profit from that 8:30 announcement, being slightly lower than expected, but pretty much where the market was expecting. Now, let's look at the same thing on EUR versus USD on the euro. So here's a chart of the euro on the same day. And you can see a very similar thing happened. Right as the announcement hit, right at 8:30, the market came down. I could have entered, I was busy trading S&P, but I could have entered my buy order for binary calls on that downturn because sure enough, the market popped in and rallied shortly after. So binary options are a great tool for trading the 8:30 US announcement because they have very short time horizons. This means you can take advantage of the price action immediately following the announcement, and you can profit on an intraday, very short-term basis. With practice, you'll be able to make consistent money each week using this strategy.